Hello everybody, what's going on? So today we are diving into a shift in global market that most people are completely overlooking because they are too blinded by the AI hype. For months everyone has been chasing the same few AI giants. But while that trade gets crowded, something massive is happening with what Bank of America calls C assets. So if you will look at the analysis Michael Hartnett team is highlighting a new path, curve steepener, China consumer cyclical, chip and commodities. Why does this matter? Because money is starting to flow toward value areas that were long obscured by AI narrative. We are seeing a breadth allocation where capital finally moved back into core Chinese assets. This brings us to a huge question. Is this just a temporary bounce, or are we witnessing a fundamental shift in how world price Chinese innovation? We are looking at the data for long-time foreign investors price Chinese companies at massive discount. But recently, its shares valuation in the Hong Kong have actually started exceeding A shares valuation. This is a systematic shift in logic. Investors aren't just looking for a cheap deal anymore. They are expanding their risk appetite for high quality core asset. And right at the center of this movement is Nio. Since the start of 2026, Nio performance hasn't been some isolated fluke. With a stable market cap between 11.5 billion and 12 billion in the US, it's clear that institutional funds are starting to view Neo through this C asset framework. But here's the real kicker. Is Neo just a company, or have we been using the wrong yardstick to measure its value this time entirely? As highlighted, the biggest mistake the market makes during a technology cycle is valuation as not technological enough. If you will value Neo as traditional automaker, you only see sales fluctuation and R&D cost. But Neo isn't just building cars. It's mastering high-end manufacturing and entire energy ecosystem. Think about this. While rest of the industry is stuck in a volume but no profit trap, where margins are projected to hit a measly 2.9 early this year, Neo is moving in the opposite direction. The ES9 has been the top selling large SUV in its bracket for the 5 straight months. Why? Because large vehicles bring high revenue and high gross margin. So, does Neo need to win a price war to survive? No, they are winning through product strength and high quality growth. They aren't just selling a battery on wheels, they are selling a premium experience that the market is finally starting to premiumize. When we look at the way the valuation anchor is evolving, it's clear that day of underestimating Neo are coming to an end. We are moving from a simplistic manufacturing framework to one that recognizes new ability to outgrow the entire industry. If the capital market are finally upgrading their perceptions of Neo from a traditional car maker to a high-end tech leader, where does that leave the stock price? It suggests we are at beginning of a massive valuation correction. I'm feeling incredibly optimistic about where this is heading. This shift towards C asset and recognition of Neo's high-end dominance is a perfect storm for investors who have stayed the course. The narrative is changing, the money is flowing, and the quality is undeniable. But we can't talk about future of Neo without talking about the massive ecosystem they are building right now. Did you know that just a few months ago, in February 2026, Neo hit a historic milestone of 100 million cumulative battery swaps. This isn't just a number, it's a proof that the infrastructure moat is real and growing, and the momentum is only accelerating. We are currently in May 2026, and Neo is preparing to report its Q1 financial report on May 21st. When you look at the delivery numbers from April, they delivered over 29,000 vehicles, which is a 22.8% jump year over year. But the real story is the year to date growth deliveries. which are up staggering 71% compared to the last year. So, with all this growth, what is next big catalyst for the stock? Is it luxury market or is it something broader? The answer lies in their multi-brand strategy. Right now, Nio isn't just one brand, it's a trio. We have the premium Nio brand, the family-focused Onvo, and the small Firefly. In fact, the Onvo L90 just started deliveries and its sibling, the L80, is launching literally tomorrow, May 15th. Speaking of flagship side, we have talked about the ES9. Pre-sales for this executive SUV officially opened last month. It's packed with over 40 industry-first technologies. If the ES8 success is any indicator, which hit 100,000 cumulative deliveries in record time, the ES9 is set to be a major revenue driver as we move through 2026. But does all this new technology actually work for the consumers, or is it just making things more complicated? Only time will answer. That's where the fifth generation powered swap stations comes in. They are entering a phase public rollout this month. These new stations are a game changer because they can accommodate everything from the compact Firefly hatchback to the full size ES9 SUV. They have even cut the swap time down to 1 minute 48 seconds. Think about that, recharging faster than you can fill a tank of gas. And they aren't stopping at city limits. Neo plans to add 1,000 more stations this year alone, even expanding into a new Silk Road swap corridor. This is how you eliminate range anxiety forever. With Firefly already being spotted testing in international markets like Australia, Neo is no longer just a Chinese story, it's a global one. So you look at total picture, the massive delivery growth, the launch of ES9 and the Onmo models, and the unmatched battery swap network. Is there any other EV company doing this at this pace? I don't think so. This is why the C asset framework we discussed earlier is so vital. NEO is proving that it can dominate the high end market while successfully scaling into the mainstream. We are watching the transition from a high growth startup to a global powerhouse in real time. If you have been looking for a reason to stay positive on NEO, the data from May 2026 is giving you exactly what you need. So keep your eyes on the earning call next week. It could be the spark that sends the stock even higher.